Auzubillahi minash shaitanir rajim. Bismillahir Rahmanir Rahim. Assalamu alaikum rahmatullahi wa barakatuh. Today's my topic of discussion is what is Islamic banking and finance. This is a brief video I'm doing as an introduction. What exactly means by the Islamic banking and finance? The banking and finance or financial institutions which follow the Sharia are called as Islamic financial institutions. So, core to them is following of the Sharia. So, Sharia's first and foremost principle is interest is haram. All types of riba, giving and taking, is haram. So these financial institutions does not charge any interest. This is the first principle. But these all are for profit institutions. They share the risk and they share the profit. So basically, when any Islamic financial institutions you say, it means they are not charging you interest, doesn't mean they are giving you the loan for free. They are not giving you money for free. They are giving you money on the profit sharing basis or rental basis. This is one of the key misconception that interest free banking means you get a loan without free of cost. No, this is not true. This is not true. There is an option of Karde Hasna or interest free debt, but for profit institutions cannot do it. Only individuals or charitable trust can do it, so that it can be considered as a interest free loan. You give 100 rupees or 1000 rupees or 1 million rupees and get back same amount over the 1 month, whatever period you want. But this is not for profit, because this you are not charging any interest, and in this situation any for profit institutions cannot do this. Only those who are doing the charities can do it, and definitely this we need, especially for reducing the poverty. We need karde hasna. We need to build such trust, endowments, work which gives support the people. But more importantly, my focus of discussion today is for profit institutions or those companies which give you based on for profit sharing, on the basis of profit sharing, so that people can share their profit. So basically, when we talk about the Islamic banking and finance, we are talking about the different contracts. Islamic banking and finance is not like any other institutions. They have the different contracts defined for the different activities, and they can only finance the halal activities or Sharia compliant activities. No Islamic bank or financial institutions can finance or give money for the activity which is not compliant with the Sharia or which is prohibited in Sharia or which can be called any haram activity. So this is the first thing. Now, every contract is a different contracts. So based upon the activity, contracts are defined. Muraba financing, this is a kind of trade financing, or we call it cost plus financing, where usually you get small loan or the trade finance if you want to import like LC or like anything you want to import from foreign country and sell it, or you want to buy from one and you want to sell in the local market. So if the bank pays you the trade finance or the money to buy it, then this bank will charge you a fixed amount or cost plus financing, like whatever percentage it is, and you can repay them in the installment, small installments of the defined period till you sell the products or whatever it is. So this is called Muraba financing. We have, apart from the Muraba financing, we have Mudarba financing. Mudarba is a profit sharing. Profit sharing when the investor, Rabbul Mal, which is called Rabbul Mal. Rabbul Mal is not active. He gave you the money to start a business and both of you agreed to share the profit based upon the agreement. So it is Mudarba financing. Musharka financing is a partnership. Partnership where two or more people come together to form a one joint venture or come together to do a business together. Some are investing, some are not investing, but all are working together and putting some kind of efforts so that the business can be run and profits will be shared accordingly. Ijara financing is basically leasing agreement where the company gives you money on rental basis to buy the different products, maybe vehicle, maybe housing, maybe infrastructure of your industry, whatever it may be. They give money on the rental basis so that you can buy the required needs and start the business. So it is basically Lijara is a, or can be called as leasing financing, lease finance. Wakala is usually used into financial terms when you give the money to a person to invest on your behalf on the profit sharing basis. So basically this person will take a fixed service charges and help you to rightfully invest your money, and it is called Wakala financing or Wakala investment. Istisna is basically used for the pre-orders. It can be construction, it can be heavy project, it can be industry. When you need to pre-order any item to get manufactured as per your needs or get it built as per your need, you go to the bank and ask, I need this product and I need money to start this product, and the bank gives you, or financial institutions give you money so that you can buy the product. So it is very important. Istisna is one of the best contract for the development, real estate development, as well as it is very good contract for the big project financing or the what we call it any manufacturing plant. We come to the diminishing musharka, the grading down of partnership, where this can be used for the when we financial institutions work together on, and they will, you will buy out in slowly their investment so that they will no more remain your partner over the 5, 10, 20 years of time. This is used for the housing finance as well as any other activity. We can have the salam contract. Salam contract is usually used for the pre-order items, food items, means the agriculture items. So this is the best solution for the farmers, those who are producing. So you finance them on the basis of the buying their product at the fixed prices when the product comes out, and the farmers has to give you the product. So this is a salam financing which is used into the used for the agriculture finance. We can have the hybrid contracts specifically for the PPP project, BOT project, or big government projects where istisna and ijar can be mixed, or istisna and the diminishing musharka can be mixed together and form a final contract based on the final use, because these projects has a different stakeholders, and ultimately the money can be generated through the different activities, and those who are building the project may not be the beneficiary of the project. And this is why we need like a real estate developer wanted to sell the project to the buyer of the home, but the buyer needs a long-term financing, and we can have the istisna contract along with ijar or diminishing musharka, or we can have multiple hybrid structures for the big projects like port projects, rail projects, road projects. But we need to structure it properly so that Islamic principles can be honored. Now, Tabarruk is one of the very important where commodities are bought on behalf of you and sold to you on the installment basis. It can be used for the commodities as well as the what we call it buying and selling of the cars and everything. And it is one very extensively used contract. The another very important structure is a sukuk. Sukuk is a debt instrument where you give the money on the fixed rental charges to the investor, and he pays, but ownership of the asset is to who is the investor. In this situation, in the case of the default, the asset must be transferred to the investor. And this is very, very important. Sukuk is a fixed rate debt instrument and can be used for the government work or government projects or the projects which give the real income. And this is extensively used but needs clarification and more strong structures. How investors make money? This is very, very important question. Investors make money through sharing of the profit. Investors make money through sharing of the rental with the your financial institution, and this is how investors make money. Financial institutions or banks make money through the sharing of instrument or through in the case of wakala through the fixed charges, service charges. So this is what how different people make money. But most important prominent thing difference is halal, difference of halal and haram. Islamic financial institutions cannot or banks cannot invest into anything which is not Sharia compliant or which is not covered under the which are the halal list. They cannot invest into the any prohibited activities or haram activities. Every activity or every financial institutions must have a Sharia auditor. Not only the accounting auditors or financial auditors, but they need to have Sharia auditors which see the ethics, compliance of ethics and compliance of Sharia by the financial institution into their every activity. Without the Sharia auditors, any activity of the financial institutions which claim to be the Islamic cannot be considered as a Sharia compliant. This Sharia auditors needs to be third party and independent auditors, and they must have all the right to verify every activity of the companies to be so that they can say that this whole action or their whole value chain of the financial institutions are Sharia compliant. So this is very, very important to have the independent third party Sharia auditor. Investing into the share market is allowed. Investing into the share market is allowed, which are in the shares which are halal and Sharia compliant. So, in anything, it is not allowed. What is not allowed into the Sharia, in the share market, short selling is not allowed, not at all. Day trading is not allowed, and the forex or interest driven debt instruments are not allowed to be invested. Exchange traded funds, ETF, investment into the exchange traded funds are allowed if they are Sharia compliant fully. If these funds invest into the Sharia compliant stocks and they have the committee which oversees their compliance, Sharia committee, then such exchange traded funds everybody can invest. Islamic insurance is called takaful, and there are the different models of takaful, and the pupils can have these takaful options for their managing of the risk. So these are all the different options which we can talk. Made a separate video on the cryptocurrency. Cryptocurrency is not Sharia compliant and it comes under the prohibited category, is not halal, and nobody should invest into the cryptocurrency. Day trading of the halal share is not allowed. Cannot be called Sharia compliant. Online trading platforms which usually promotes different types of what we call it forex trading or what we call the commodities trading are not Sharia compliant, are not at all Sharia compliant. Any activity which is not overseen by the Sharia auditors, third party independent Sharia auditors, and cannot be verified, it cannot be called halal, and so that it cannot be said no one should invest into all this stuff. So, what is purely haram activities? Gambling, casino, alcohol, pork, arms, interest bank and conventional banking, movies, music, anything which promotes the adultery is haram. Now, let us talk about who defines the Sharia standards. Who is responsible from developing the Sharia standards? So basically, Sharia standards, the highest body in or the authority is of Organization of Islamic Countries, Islamic Fiqh Academy. They usually define the core basis of the Sharia standards for the Islamic financial institution. But Accounting and Auditing Organization of Islamic Financial Institutions, IOFI, is the one who really make the standards for the Sharia audit or Sharia investment, and they are the one who provides the certification for the qualified people, those who can do the Sharia auditing. So it is the IOFI, which is based in Bahrain, is an organization and it is organization of the most of the Islamic countries or the member states of the Organization of Islamic Countries, and they are the core body who defines what is halal, what is not halal, where to invest, how to invest, and what is the core values of the investment, or which we can call it as a standards of Sharia investment. They provide the certification and the qualification for the people who want to do the audit. And they have the two core qualification. One is a Sharia auditor and one is a Sharia accountant. And both are very good qualification and can be taken all over the world. Now, the another institutions which is very important is the Islamic Financial Services Board. Islamic Financial Services Board is an institution which is of the members financial institutions. These members financial institutions come together to make this Islamic Financial Services Board. They define the corporate governance standards. They define the standards for the audit. They define the rules and regulations for the financial institutions to be followed and approved. And this is very important for the financial institutions to follow these rules and regulations created by this independent body. Another very important qualification is a CIFP, Chartered Institute of Islamic Finance Professionals. Basically, INSIF, which is a institution or university created by the Bank Nagara. International Center for Islamic Finance Professional, and this institution provides a lot of qualifications into the Islamic finance, and this is one of the most accepted qualification all over the world for the Islamic finance professionals. So this is my brief video on the Islamic finance and banking. Your questions are very welcome. I am ready to answer all types of your questions on the Islamic finance and banking. Thank you very much for watching this video, and please subscribe to me so that you can get notification for my new video. Thank you very much.